Hi everyone, let's go over my micro, bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the greatest trading psychology scenario, which is this one over here. Now, I would really like this to happen, where you have this move towards the upside before then a crash towards the downside. The reason this is so attractive from a trading psychology point of view is that you're playing with retail, right? And the emotions, because especially traders that are just starting or retail traders with not too much experience are tend to be very emotional in trading. Price over here took the double top, as you can see, high number 1, high number 2. So undoubtedly some people have been breakout longing over here. They're now underwater, but they might be lucky as price might still continue towards the upside. And I think this scenario is very interesting. Now, all the lines that you see over here, the 3 above the double top, these are 2022 range highs. So there is some liquidity above each of this line, right? So price moving to the upside, I think, is interesting to grab the first line, but then move towards the downside. So all the breakout longers over here are gonna be underwater, might be scared, maybe their stop losses are being hit, or they're just closing the trades themselves. Then price over here can find some support on the value area high of this range or the point of control of this range for then another 5-wave impulsive move to the upside. And what you're then creating is a 5-wave move and then a 1, 2, 3, 4, 5 3-wave correction, and then another 5-wave move up. Now, from the Elliott Wave theory book, if you have a 5-3-5 move, this can be either a wave 1, 2 and then an explosive 3 for much higher prices, or it is a zigzag, which is a 5, 3, 5, and then you expect to move to the downside. And that is what I would be looking for in this scenario, and something that I think is very attractive, because then the second impulse over here is going to grab the other highs of the 2022 range highs, where people are going to be so massive longing, of course, when price is going to move again towards the upside impulsively. You can already see it happening, expecting much higher prices, but all those breakout longs are going to create the liquidity for bigger positions to then fill their shorts and look for prices to the downside. Very interesting indeed. And the potential setup around this area is a potential swing failure pattern trade, which is basically taking the highs, so taking the white lines, but closing the candle below. That is the entry, stop loss above the high, and then you'd be looking for a move towards the downside in then a wave C, as we're then looking for an expanding flat A, B, C, where this is a potential trade. Of course, you have your own plan and your own setup, right? We are on YouTube. There's no financial advice, but it is very interesting indeed. If we go to basically that scenario, but now in Elliott Wave terms, we're then looking for this to be an ABC, right? A 3-wave in A, 3-wave in then over here wave B, and then you'd be looking for a wave C to the downside, which is an impulsive structure. So a quick move, sharp move to the downside. Inside of this wave B, we're then looking for a 3-wave structure. So over here, W, one could argue, was an ABC, A, B, C, where B was very long and sideways, also very shallow, 5-wave move to the upside, and then wave C, which is actually quite a nice wave C, taking longer than wave A to form, which is usually what you want to see. Then you have a complex 3-wave structure in a wave X, where I had this bars pattern in the video this morning, and I said this overlay is really nice between the bars pattern and the price action that we have, and moving towards the upside is definitely interesting. And I also mentioned in the morning update that if price is going to move towards the upside, then I'd be looking for this scenario over here. If price is first going to take this low, then I'd be looking for a bearish scenario for lower prices. However, price moved to the upside, so now that other scenario, the bearish one, is invalidated and removed, and I'd be looking for a little bit more upside. Now, this bars pattern is a copy from the chart of March and February this year. So if we go back in time and we go to this section, then the price action we had locally on the 1-hour time frame made me think of this structure over here. Really like equal price action, the same price action over here. And what you can then do is you can click over here on bars pattern, then you select the high, you select maybe the low or a little bit further, and you get this pink or your color, whatever your color is. You get like the bars pattern, and then you can overlay it on the current price section. Now, of course, price, you know, it's never 100% the same, but it does rhyme. And in this scenario, look at this, it worked perfectly, right? The low over here, a nice structure to the downside for then a move up, a double zigzag in then a wave X, for then a move to the upside in wave Y. And I think it would be interesting that at the moment this wave Y is then a zigzag as explained in the trading psychology scenario. So a 1, 2, 3, 4, 5 wave move up, then you get a 3 wave move to the downside before another impulsive structure to the upside, and then you get a wave C down, right? Most common target for wave B is between the 1.236 and the 1.38, which is between 31.9k and 32.2k. And the most common target for wave Y, taken from the low to the high of W to the current low of X over here, is in between 32.2k and 32.7k. So price can wick over here, then still close inside the most common target area for B, and then move to the downside. Very interesting scenario indeed. In another bearish scenario, this was one of the options where you then have a WXY where X is already finished. Now this wave X is relatively short from a time perspective. It finished just in front of the 0.5 fib time, which if I put that one on my chart is the green line over here. It is fine for a wave X, but usually in corrective structures, having structures finish around the 1-to-1 or 618 to 1.618 is a nice range. And in this scenario, wave X is a little bit shorter, but we were again looking for an expanding flat 3, 3, and then a 5 wave move to the downside. The only difference is that now this wave B target area is lower because the other one is over here, and now it is lower because it's pulled from this high to this low, while the other one is pulled from this high to this low over here. Now in this scenario, what's very important is that a wave B to the upside, or at least a final structure, has to be a 3-wave structure. So if this is a 3-wave A, you want to see a 3-wave B before a move to the downside in wave C. And currently, this doesn't look like a 3-wave structure. It looks actually a little bit more impulsive. Now I will talk about the invalidation of this being an impulse in a second, but as it stands, of course, it looks a bit more impulsive to the upside, where probably this is more in play, like a more preferred scenario than this one at the moment. Also, this wave X in this scenario is then, or wave B in this scenario, takes a bit more time as the vertical lines are fib times, and then the high of B is not yet in, with the 1-to-1 being tomorrow, where tomorrow we also have a very interesting news. Now, it is good to at least talk about the target area for this scenario in case price is going to move to the downside, because if this is a 3-wave move and we're going to go down to take this low, then this scenario is on the cards. The 105 has been hit, which is a minimum target for an expanding flat wave B, and then the most common target area for a wave Y is between the 1 and the 1.236, which is between 29.4k and 28.9k, which is also a nice confluence with the target box that we have over here, which is positioned between 28.8k and 29.1k. If we go to finally the bullish scenario, then I was talking about a potential invalidation of this being an impulsive structure. Now, before I'm going to talk about the fibs that you see on the chart, because that has to do with the invalidation, let's just look to this impulsive structure. Now, this impulsive structure means this is the low, and we are expecting much higher prices to come. Now, if we take a look at the volume, and Marcin in the Discord group, in the Bitcoin TA group, noticed this very well. He said, his name is also known as SKDG, by the way, but Marcin in the group, he said, wait, if this is the volume for a wave 3 to the upside compared to the volume over here, it's very low. And that's true, because in this scenario, in a bullish scenario, you'd be thinking this is a wave 1, you then have a wave 2, and then this is a 1, 2, 1, 2 for then a big 3 to the upside. So you want to see continuation, you want to see volume popping in, you know, higher than you had over here, because this is only a wave 1, this is part of a wave 3. But the volume is very low. So very good spot, very well spotted by Marcin, where in this scenario, The only bullish way to count this really is that it is a 1, 2, 1, 2, and then this is now part of a bigger 3 to the upside. Now, I actually yesterday with the gold members on YouTube, we did a whole stream about the 1, 2, 1, 2 scenario. For everyone that's watching that's in gold, you know this doesn't look that great, because in a 1, 2, 1, 2 scenario, preferably you want to see a diagonal, meaning a 1, 2, then a 1, second 2, third 1 potentially, third 2, and then you move up, creating a diagonal structure. That is by far most common. And here you can see an expanding diagonal, which is in general very rare. So that's not too nice. And also this second wave 1 is longer in time than the first wave 1, which is also not something that you like to see in a double or triple 1, 2 scenario. The last reason this isn't that great is because this wave 2 over here went all the way, retraced all the way to the 886, which is pulled from the low of this 2 to the high of the blue wave 1. And the 886 is a rare target for a wave 2 and a common target for a wave B or a wave X. So because this is a rare target in combination with an expanding diagonal, the second wave 1 being longer than the first wave 1, this scenario at the moment is not yet preferred. If we then zoom in to what is happening more locally, then this could be a potential 1, 2, 1, 2, and then a move up, or just simply a wave 1, 1, 2, 3, 4, 5, corrective 2, and then you'd be looking for a move towards the upside. And currently on the lower time frames, this can then be a wave 3, potential 4, and then a move up for a wave 5. If we look at this being the low of 2 and this being the high of a wave 3, you pull a fib from the low of 2 to the high of 3 to check the wave 4 targets. And usually the most common targets for a wave 4 between the 236 and the 0.5, with the 0.382 usually being the most respected. Now, as you can see at the moment, candles closing right on top of the 0.382. Very, very nice indeed for then potential continuation to the upside. And also what is very interesting is that while that happened, we also had this going on. So if you pull a fib from the first impulsive candle to the top, then you see that price is bouncing on the golden pocket, and we also had bullish CVD divergences. So if I go even to lower time frames and you pull a fib from this low to this high, and I put it on the golden pocket, sorry for the mess here, there we go, then you see we hit the golden pocket and we have some bullish CVD divergences locally as well. So I go to the 3-minute here at the moment, you see higher low in price, lower low on the yellow CVD, bullish CVD divergences, where the target is going to be this high, which is incredibly interesting for the scenario I just explained, and also the trading psychology scenario. Now, if we do look at the CVD in a little bit more detail, then we had bearish CVD divergences over here, where the target was this low, played out very nicely. Price came up, and in the morning video, I said this is a second bearish CVD. I don't prefer those. I prefer first CVDs and not second CVDs, because the first CVD with this high was a bearish one to the downside, played out. Then price moves up, creates another bearish CVD divergence with the same high, but it's not preferred because it's the second one. And the more times you get CVD divs, the less probability. Then price moved to the downside, creating bullish CVD divergences, which was very interesting for then potentially a long scenario. So over here you can see we had a higher low on price in blue, here the blue line, but a lower low on the yellow CVD, creating a bullish CVD divergence. Go to the 5-minute over here, zoom out a little bit, then you will see lower high on price, higher high on the yellow CVD, bearish divergence, move down, perfect. Move up, still creating bearish CVD divergences, not preferred, it's the second one. And then especially when you see this, you got to get out of shorts, right? Because then you also see over here higher low on price, but before we get the pump, a lower low on the yellow CVD, which is a bullish CVD divergence, for then showing us that there is absorption of market shorts, for then a push towards the upside. And oh boy, what a push it is indeed. And even when you break out, by the way, you can see it back tests this trend line for the trend line traders over here. So very, very, very interesting scenario. Now, if we do look at the news, as we have some news today at 4 p.m. Central East European time, we got high impact news, so make sure you trade safe. And then tomorrow is going to be a crazy day. So let's see what happens. And especially because tomorrow has so many incredibly interesting news items, keep an eye on this potential scenario that if price is going to move towards the upside in a straight line, well, then it is more likely we might look for continuation, because again, we want to see a three-wave structure in Y, right? We want to see something like this, not something like this. So if we do get a move down and then tomorrow comes, which is the 1-to-1, and then tomorrow comes and we get that wick to the upside and then a move down, that can happen during the news. That would be incredibly interesting. Now, if we talk about the probabilities, currently the highest probability scenario for me is this WXY scenario. Of course, we do want to see a three-wave structure. So something like this before it is going to reach all of the targets up here, right? So preferably a three-wave structure in a zigzag, which is a 1, 2, 3, 4, 5, correction, and then another 5-wave move. If this is going to just go up on high volume or higher volume than it does now, but volume is increasing in a straight line to the upside, well, then maybe the bullish scenario is going to take over, right? I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.